You're listening to AI Prism from Seoul Economic Daily.
The Korean won just broke below 1,400 per dollar for the first time in 10 months, even as U.S. bond yields hit their highest level since 2007. Samsung and SK Hynix stock got crushed on Wall Street's AI memory jitters. SK Hynix is rolling out a plan to push total shareholder returns toward 100 trillion won this year. And Korean-listed companies just posted a 254% jump in first-half operating profit. It's Thursday, August 20th. Here's why global investors are paying attention to Korea today. Korea's currency and equity markets are sending mixed signals this week, decoupling from the textbook relationship between U.S. yields and the dollar. Rising U.S. fiscal deficits, not just rising yields, are being read by markets as a risk premium rather than a return signal, which is helping non-dollar currencies like the won. At the same time, record Korean corporate earnings and a supply chain-driven foundry story are giving investors reasons to look past the short-term semiconductor sell-off. Here's what the numbers show. The Korean won closed at 1,397.7 won per dollar on August 19th, its strongest level in about 10 months, as exporters and offshore investors sold dollars. The U.S. 30-year Treasury yield hit 5.33% and the 10-year reached 4.73%, both the highest since 2007, driven by a fiscal 2026 deficit of $1.799 trillion that has already topped last year's full-year total. Samsung Electronics and SK Hynix still fell 7.82% and 9.75% on August 19th, after the Philadelphia Semiconductor Index dropped nearly 5% overnight on renewed doubts about AI infrastructure spending. SK Hynix's board approved a 40.043 trillion won buyback and cancellation, part of a plan to lift total shareholder returns toward 100 trillion won this year. KOSPI-listed companies posted 388.15 trillion won in combined first-half operating profit, up 254.15% year-on-year, with non-memory companies still growing profit more than 75%, even excluding Samsung and SK Hynix. Samsung also raised foundry order prices by up to 15% in July, as TSMC's advanced node capacity hit a ceiling. China's approval of NVIDIA H200 imports for ByteDance and Tencent adds a new cross-border variable for chip demand forecasting into year-end. So what does this mean for global investors weighing exposure to Korea? Earlier, we said the won broke below 1,400 even as U.S. yields hit multi-decade highs. That decoupling suggests markets are pricing U.S. fiscal risk as much as they're pricing Korean fundamentals, which matters for currency hedging decisions. The semiconductor sell-off looks more like a rate-driven valuation reset than a demand problem, given record first-half profit growth and SK Hynix's aggressive capital return plan. Samsung's foundry pricing power and China's chip import easing are both worth tracking as they reshape the regional supply chain investors are underwriting. Watch whether USD to KRW stabilizes near 1,400 or extends toward the 1,300s by year-end, as some economists project. Watch SK Hynix's follow-up dividend and buyback announcement expected around its October Q3 results. Watch further Chinese approvals for NVIDIA H200 imports and their effect on global chip demand. That's today's AI Prism, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Won IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.